Today I'm doing a full market breakdown on GBPUSD and gold, whereby I'll be showing you guys what I'm expecting this market to be doing, and also you'll understand how I'm looking at the market and what I'm expecting to be happening along this month again. You see, last month we had a pretty successful month whereby the market gave us about 4,000 pips. We took only 9 entries on gold. Out of these 9 entries, we took one loss that was about negative 44 pips. And the other ones just went straight to our take profits. We had all again we took some losses on Euro USD and GBPUSD. That was about 60 pips again, so totaling about 100 pips. So that was still good, which means we are up this month. So last month. So I want us to jump straight into the market and start doing our market analysis. Normally, before I do my analysis, I try to understand what the market. Normally I start my analysis from the bigger time frame, and now after that, now I come to the smaller time frame, maybe to look for my entry. So in this market, I'll just go to the bigger time frame in the gold market. So I'll delete all these structures that I had from the previous month so that we can have a cleaner chart, and now start looking for new structures and probably try to understand what the market will be doing right now. So I'll go to the 12 months time frame. I'll go to the yearly time frame. We see what the market is doing from there. So I'll start my analysis from the yearly time frame. Let's see what the market is doing here. Then after that, now we go down all those smaller time frames and try to find how I try to understand what the market is doing. So as you can see from the yearly time frame, this market is on a bullish trend. You see the market giving us this impulse move. We have this correction, then we have this impulse move, correction, impulse move, correction, impulse move again. So we are on an impulse move from the yearly time frame. But again, this market is on a key area at this point up here. Let me show you. If you look at this market at this point, we are at this point whereby the market came all the way up here. It gave us a first touch at this point, a second touch at this point. We're having a third touch at this point, and you see the market reacting around this area. You see it's giving us this kind of a long week candlestick at this point. So that means that there's a possibility of this market respecting this area that we have up here. So maybe a possible scenario that can happen from this point is this market maybe come down. We have a support down here to this area down here, and maybe go up again. If it breaks above this area that it has formed at this point, maybe we should expect it to continue pushing upwards. So that's how I'm looking at this market from the yearly time frame. You see, we are on a key area at this point, so which means there's a possibility this market giving us sell entries in the lower time frames. Probably, I don't know. Let's keep doing our analysis and try maybe to see what is happening. So this is what I'm looking at the moment. So if I just draw my trend line from all the way up here, we'll have something like this. We'll have something like this, and let's now identify our key areas from this market. We have that one, then we have this one down here. We have this support, we have this one again. We have this area up here. We have this resistance at this point, whereby you saw the market broke above this resistance area. Then normally after market breaking above any key area, you normally expect the market to give you a correction. So which means this yearly candlestick, after breaking above this area, maybe there's a possibility of us having a correction all the way down here, probably before it continue pushing. So there's a possibility of this candlestick playing along this area, whereby it will be giving us opportunities to take our entries from the smaller time frames. So after understanding now this is what is happening, let me go down to the monthly time frame or the 6 months time frame, and at least we'll see what's happening there. Let's go to the 6 months time frame. So from the 6 month time frame, the structure is still the same. It's only that it's clear at this point. So you see this market reacting around this third touch at this point. So there's a possibility of this market coming down to this area, maybe to retest this area before it gives us that continuation pattern. Probably if it does, but if it doesn't, if it breaks below this area, then we should expect to go all the way down here, then again to this support that we have down here. So that's the possible scenario that can happen. And you see, we are looking at this from the bigger time frame. That's from the 6 months time frame. So let's go down to the 1 month time frame, and at least see what we can understand from there. Going down to the 1 month time frame, we have this 1 month time frame down here. So looking at this market at this point, again from the 1 month time frame, we having these kind of structures. I don't know if you can see, this market is giving us these. We have impulse. It's giving us this impulse correction structures. So we had this impulse move all the way from down there. We had this correction. The market broke above that correction area, gave us this inverse head and shoulder at this point, then gave us this bullish candlestick at this point, then after breaking above the neckline, pushed all the way up there, again gave us this inverse correction at this point. Then after giving us this correction, we pushed all the way up there, whereby we see the market rejecting around this area, then giving us this double top at this point. After that, we pushed all the way down there. So this was a correction. This was just a correction after the market giving us this impulse move all the way from down here. So this was a correction the market was giving us, whereby we see that the market broke above this correction area after reaching this key area that we had at this point. So it created this key area down here, whereby the market came and respected this area. Then after that, we see the market breaking above the correction area and pushing all the way up here, and pushing all the way to this area up here. And if you look this market from this monthly time frame again, if you look at this market from this immediate structure that we had, we see we had this impulse move at this point. Market came down. Let me do it correctly. So we had this impulse move at this point. The market came down, went up again, came down, went up, came down, went up, gave us this structure at this point. So this structure is what we call an inverse head and shoulder. Whenever you see this market giving you this structure, this is a reversal pattern. This is a continuation pattern. You should expect probably the market to break above that neckline and continue pushing to the upwards. So this is what the market was doing last year. The market was trading at below this area. You see, last year the market was breaking below this area before breaking above that neckline, then with this bullish engulfing candlestick. And from the smaller time frame, we'll see this one is an impulse move. So before the market breaking above that area, then continue to push to the upwards, giving us those buy opportunities. But right now, when we look at the market, it's rejecting around this area. You see, from the previous month, the market failed to break above this area and gave us this long wick candlestick at this point, showing that this market is rejecting around this area. So that means that this is a very strong area where we are at this point. So which means there's a possibility of this market selling all the way from here and going to the this area that I was showing you down here. So looking at that, understanding that this is what the market is doing, at least again normally after having an impulse move, you expect the market to give you a correction. So probably after coming to this area where we have these support as a resistance at this point, after coming to this area, so there's a possibility of this market giving us a correction, which will give us something like this. So we may have something like this, which is a correction from this monthly time frame, then probably before the market pushes upwards. So again, this is the neckline at this point, where there's a possible scenario that the market may come down here again to retest this neckline that it broke above, because you see, from the monthly time frame, after the market breaking above this area, it didn't give us any retest. So which means there's a possibility of the market coming down here and giving us this retest before maybe we continue pushing to the upwards, if the market does that. But if the market does come down here and breaks below this area I've told you, we'll expect this market to continue pushing to the downside, whereby we'll have our key entry, we'll be looking at these support and resistance areas as our key areas, whereby we'll be taking our take profits and maybe having our stop losses. So that's from the monthly time frame. That's what I'm looking at in this monthly time frame. Let me go down to the weekly time frame, and at least we see what is happening there. I'll clear some of these because we don't need them. So let me go down to the weekly time frame. When looking at the weekly time frame, so again, when looking at the weekly time frame, we have some other structures that the market is forming at this point up here. I told you that this market is rejecting around this area, and you see the way it's rejecting around this area is a suggestion that there is a possibility of us pushing to the downside. So looking at this point, the market has given us a double top at this point. We have this double top at this point. We have this double top at this point. And guys, I've been telling you that whenever you see the market giving you a double top on top of, maybe we are on an uptrend, then you see the market giving you those double tops, that means that there's a possibility of the market starting giving you that downward push, which is because this double top at this point will act as a reversal pattern. That means that there's a possibility of this market pushing all the way from up here to all those areas that I was showing you from the bigger time frame. So you see at this point we have this double top at this point. Then after having this double top again, we have this we have this bearish engulfing candlestick at this point. So you see from the previous week, this bearish engulfing candlestick did close below this area. Then last week the market was giving us a retest from the smaller time frame. That is, we go down there and you'll see what the market is doing. You see, this is what is happening from this area. So this is the possible scenario that can happen at this point. So you can see that this market, if it comes down and breaks below this neckline down here, then that means that this market, we should expect it to continue pushing all the way down here. So if it does come and breaks below this neckline, this one week candlestick does come and closes below that neckline, then maybe expect a retest, then you push all the way down there. So that's the possible scenario that can happen at this point. So if you are a swing trader, this is a very, very good opportunity that you should be looking at. You should be looking at this pair, because if you catch it at the right place, it can give you very good pips, or it can give you very good money in the market, guys. So that's what I'm looking at from this weekly time frame. At least from the weekly time frame, we have about, so let's see, about the market is rejecting around these. The market is rejecting around this key area, which is a resistance from the 1 year time frame, and you know how strong that is. Then you see again, after seeing these kind of rejections at this point, then we have another reason why we may be looking for a reversal at this point, because this market is giving us double tops at this key area again, where we're having that rejection. Then again, after that, we have this market giving us this bearish engulfing candlestick from the previous week at this point. Then again, after understanding this is what is happening from this bigger time frame, from this weekly time frame, I will go down to the daily time frame and try to look for maybe more reasons why we should be looking for this market in a bearish way. So let's go down to the daily time frame. Coming down to this daily time frame, this is what is happening at this point. You see how strong this downtrend is. You can see that double top very clearly from this daily time frame. See the market failing to break above this key area and giving us this downward push, and after that the market gave us this impulse move all the way down here. Then we went up again. This market again, after going up, it gave us this correction. So this was just a correction that was happening at this point. See the market giving us a correction to this area up here. Then after that, you see the market giving us this bearish engulfing candlestick. Then we start pushing to the downside. See, Then on Friday we had news at this point whereby the market also again came all the way up here. So all these structures that are happening at this area, this was just a correction, and which means there's a possibility of this market continue to push to the downside. So this is the immediate thing that is happening in the daily time frame from the gold market. And I've told you guys, whenever you see a market giving you this kind of structures, these are bearish structures. So this market is giving us something like this, of which we should expect to break now below this area and continue pushing to the downside. And when we come to this support area, we should expect at least the market to react. Maybe it may push up a little bit before continuing pushing to the downside. So that's a possible scenario that can happen from this daily time frame. I want to go to the 4-hour time frame and at least see what we can get from there. So we've understood that from the bigger time frames, we should be looking at the market in a bearish way. Let's go to the 4-hour time frame and at least try to understand what we can get from there. So this is what is happening at the 4-hour time frame. You see, we had this market giving us these structures. We had this impulse move all the way from up here. Let me show you. We had this impulse move. We had this impulse move all the way from up here. The market gave us this correction. After giving us this correction, it broke below this correction area with this engulfing candlestick, then pushed all the way down here with another small impulse move again. Then you see the market going up again, giving us another correction. Then after this correction, you see we having again this bearish engulfing candlestick that was formed at this point, and still you see the market pushing to the downside. So which means after now this market breaking below this area, we should expect it to give us there's a possibility of this market giving us this bearish engulfing candlestick. I mean this bearish momentum all the way down here. There's a possibility of this market giving us this bearish momentum all the way down here, giving us that beautiful impulse move all the way down there. Then when we reach at this point, probably because this is a support or a key area that we're looking at this point, then we should expect at least when the market comes down to this area, we should expect it to give us maybe a correction before breaking below that correction area and continuing to push to the downside. So that's a possible scenario that can happen in this market. And we see so far from the previous month, the market has been respecting all our setups in the market. So which means that's the same way we're looking at the market this month. So which means there's a possibility of this market continuing. There's a high probability of this market continuing to respect our setups. So that's what we'll be looking at. But if we don't get these structures, that means that we'll try to look at the market in a different way at least, and try to understand maybe what is happening. You know, in the forex market, you normally don't want to stick to the same stuff. You always want to grow at least. Maybe try to be dynamic in the market and at least try to understand what the market is doing from all perspectives, guys. So yeah, that's what the market. That's what I can see from this market from this 4-hour time frame. And also, if we try to draw our trend lines, let me show you. So this is how I could be looking at this market if I wanted to draw my trend lines. So I could have done this from this 4-hour time frame. I could have done this. This immediate structure the market is giving us at this point. These immediate structures the market is giving us at this point. You see, this is what happened last Friday, whereby you see the market was giving us this market was playing around this area. So I was looking at it to respect this kind of structures. You see, the market came down, gave us this correction to this area down here. Then it gave us some opportunities to sell. We took the entries from there. We pushed all the way down there. Then again, give us some opportunities to buy from here, went all the way up here. Then the news came and pushed the market all the way to this key area that we had at this point. So there's a possibility of this market maybe coming all the way up here to give us a third touch. So maybe the market might come all the way to this area to give us a third touch before again now continue now to push to the downside and probably break below this area, then continue pushing to the downside. So this is what I'm looking at from the 4-hour time frame, and so far the market has been, as I've told you, the market has been respecting this setup. So there's a possibility that these can happen in the market again. So let me go to the 1-hour time frame and at least see how maybe we can take our entries if the market does respect our setups again. So this is how clear it is from the 1-hour time frame. You see, you can see how clear this is from the 1-hour time frame. We had that beautiful impulse, then we had this correction at this point, then we had this impulse, we have this correction at this point, we have this impulse. So there's a possibility of this market coming all the way to this area up here. So on Monday, maybe we should, or on Monday or this week at least, we should expect probably to have something like this. This market might come all the way to this area. Then for us to take our entry, maybe expect the market to give us at least a double top at that point. Then we take our entry after having a good confirmation from there. Now we should take our entry from there and maybe hold it all the way down here, and probably you can continue holding all the way down there, but you should be keen on how the market will be reacting around this area. So if you'll be holding, which means that you'll be having your stop loss at break even, just to protect your money, because you see this market might not break immediately below this area and starts to give you structures like this. It might not break immediately and starts consolidating around this area, which is a possible scenario. See, before now, probably breaking below that area and continue to push to the downside, or probably breaking above that area and continues giving us to the upwards. But my bias on this gold market is still bearish, because I'm seeing all other structures from the bigger time frames, all the way from the yearly to the 6 months to the 1 month to the daily, weekly. All those are telling me that there is a possibility of this market continue to push to the downside. So which means I'm still bearish in the long term. I'm still in a bearish bias in this market, which means that's what I'll be looking at in the market. So that's it for the gold market. Let's see how it will be behaving tomorrow, and maybe if it does give us this kind of structures, then probably we should jump just right into the market and see if we can take advantage and make some money out of there. So let me go to the GBPUSD and at least see what the market is doing. Actually, I had done my analysis from the GBPUSD last week. Then doing my analysis from the GBPUSD, I shared this to the free Telegram channel, whereby I told you guys what I was expecting the market to be doing. When I did this analysis, the market was down here. Then I told you guys I'm expecting this market to come all the way to this area, maybe to give us this right shoulder at this point before probably breaking below this upward channel and continue now to push downwards. So that's what I'm looking at, this GBPUSD. Let me show you how I came to the conclusion that now there's a possibility of this market continue to push to the downside. You see, for this, I'll start from the daily time frame. You see, this is a key area that we had at this point. You see the market reacting around this area for a very long time. And again, if you can see, we can draw a trend line at this point. We see this is a key area that we have around here, and the market is giving us something like a head and shoulder from the daily time frame. Let me show you the head and shoulder we're having at this point. So this market is giving us something like this. From down here, we went all the way up there. I'm looking for a drawing tool, not this one. So from down here, the market went all the way up here, gave us this left shoulder at this point, then went up, gave us this right shoulder at this point, then went down, came up again to give us a right shoulder at this point. So there's a possibility of, you see, after giving us this right shoulder at this point, we had this rejection candlestick at this point. So this is like a hammer at this point. Whenever you see this kind of candlestick, this showing us that maybe we are reversing to the downside. Then after that, after we're having that, we're seeing this market giving us this bearish engulfing candlestick at this point. We're having this bearish engulfing candlestick at this point. So the way I'm looking at these, after having this bearish engulfing candlestick from the daily time frame, these ones I'm just looking at this just as a correction. So normally because the market, after giving you an impulse move, you always expect a correction. So I'm looking at this as a correction, what is happening at this point. So let's go down to the 4-hour time frame and see what the market is doing from this immediate area. And when you look at the 4-hour time frame, though we have this uptrend all the way from down here, I've shown you that this is the key area that I was looking at the market in the daily time frame. And you see the market coming to this area and respecting this area. After respecting this area, you see I was pushing all the way down here. So there is a possibility of this market, you see the market did fail to break above this area. This candlestick failed to close above this area, which means that it gave us this left shoulder at this point. I don't know if you can see this head and shoulder from the 4-hour time frame. So the first thing is we've had head and shoulder from the daily time frame, and when looking at this market in the GBPUSD from the 4-hour time frame, you see we have this left shoulder at this point, then we have the head up there. Down here the market has given it as the right shoulder at this point. So there is a possibility of this market maybe breaking below this channel, then continue pushing all the way down there. Maybe if you take your entries from up here, you should be expecting the market at least to take profits in those key areas that we're having at that point. So this is what I'm looking at the gold market right now. I'm still bearish in this GBPUSD. So my bias is still bearish in GBPUSD. So that means that when the market opens, at least I'll be looking for the market to give me confirmations for me to take my entries in this market. Right now you can't just take your entry at this point because we are on this upward channel. So if you take your entry at this point, so there's a probability this market might come all the way up here again, maybe after breaking above this area. Maybe it might go all the way up here because we have another support at this point. So maybe it's not advisable for me to take an entry at this point. So I'll wait for this market probably to give me at least a confirmation or a reason to take my entries in this market. So on Monday and this month, or probably this week, this is what I will be looking at. And also I'll be looking at some other pairs, like I told you guys, US30, GBP, USD, gold. I'll be looking at Nasdaq again. And yeah, those are the only pairs we'll be looking at the whole of this month. And we're expecting to kill it again because the market is giving us these beautiful structures, guys. So I normally share these entries with my free Telegram channel community. This is my free Telegram channel community. I normally give these entries to them, guys. So make sure if you're not one of them, make sure you go check it out. Join my free Telegram channel. It's a very active channel, so it's like I know you'll benefit from there and you'll learn a lot from there. So make sure you go check it out, guys, and make sure you subscribe to my YouTube channel so that you never be missing these entries or these analysis when I'm giving them out. So thank you for watching, guys. This is Profit and Edge signing out. See you in the market. Adios.